Monday night, 8 p.m. and we're back with your daily market dose Corporate Central, where we get you the everyday pulse of the corporate world. And not just that, also taking note of all the market fluctuations. But first, let's find out what took place in the corporate world today. ICICI Lombard on Monday gained the most since March 2020 on ICICI Bank stake increase. In early trade, ICICI Lombard shares were up nearly 12%, and this comes on the back of ICICI Bank raising its stake in its listed general insurance joint venture with Lombard to beyond 50%, making ICICI Lombard officially a subsidiary. The board of directors approved an increase in shareholding in the company in multiple tranches up to 4%, out of which 2.5% will be bought by ICICI Bank, the insurer has said in a statement to the exchanges on May 28th. And ICICI Bank had earlier on March 10th informed the bosses that RBI had granted it an extension in the timeline for divesting its shareholding in ICICI Lombard to less than 30% of the company's paid-up capital till September 9th, 2024. But now its board has given a green flag to increase its stake in ICICI Lombard by up to 4% in multiple tranches. As per the guidelines of the Reserve Bank of India, banks can own a shareholding of either less than 30% in insurance company or more than 50% stake. At close, the shares of ICICI Lombard were trading at 1,190 rupees, up 8.9%. The holding company of Wadia Group, the Bombay Burma Trading Corporation, has fully provided for its exposure to bankrupt Go First Airline and made a provision of 1,865.66 crore rupees for 2022-23 as regards to its investments in Go First and other related financial obligations. Excluding a share of the loss in Go First during the year, the company owned a 33% stake in Go Airlines, which operates Go First, while the rest is owned by unlisted holding companies of the Wadia Group. The company also had a debt exposure as of March this year and has not made provisions for exposure of 290 crore rupees as of March this year, which was said by BBTCL. In a relief for a Jalan Karlrock consortium, which has emerged as a successful bidder to take over Jet Airways, the NCLAT on 26th May granted it more time to make payments to the State Bank of India. The appellate tribunal said that the NCLT had approved the consortium's resolution plan in January, but the matter on appeal for stay was heard by it in March, which was turned down. Hence, it would be proper that JKC gets an exclusion from November 16, 2022 till March 3, 2023 from complying with payment obligation towards SBI. The NCLAT has also pulled up SBI for threatening to invoke bank guarantees instead of cooperating with JKC in implementing the resolution plan. It noted that performance bank guarantee can be invoked by lenders, but only when successful resolution applicant has failed to implement the plan. Moody's Investors Service on Friday has said that it has upgraded its rating outlook on Tata Motors to positive from stable. The agency expects the improvement in the Indian automaker's credit profile to sustain for the next 12 to 18 months, according to a statement on Friday. It also forecasts sustained improvement in all three automotive operations: commercial vehicle, passenger vehicle, and Jaguar Land Rover Automotive. In terms of a ratings action, it affirmed its B1 corporate family rating and B1 senior unsecured ratings for Tata Motors. Moody's said that it would upgrade the ratings if Tata Motors delivers a slightly longer track record of consistent improvement in its credit profile. Sun Pharmaceutical Industries has said that it has proposed to fully acquire Israel-based Taro Pharmaceutical Industries through a reverse triangular merger. The Mumbai-based drug major said that it has issued a letter to the Taro board with a proposal containing a non-binding indication of interest to acquire all of the outstanding ordinary shares for a purchase price of $38 per ordinary share in cash. Sun Pharma currently owns a 78.48% stake in Taro. The purchase price represents a premium of 31.2% over Taro's closing price on May 25, 2023, which was a 41.5% premium over Taro's average closing price in the last 60 days and a compelling liquidity opportunity for Taro's shareholders. Under the indicative proposal, post the acquisition, Taro will become a wholly owned subsidiary of Sun Pharma and will be delisted from NYSE. US-based asset management firm Baron Capital Group has reduced food and grocery delivery company Swiggy's valuation by another 10% yet again to $6.38 billion as of March 31st, 2023. The company has estimated the fair value of its stake in the company at about $45.76 million, according to the investors' filings on the Securities and Exchange Commission. This development comes weeks after it was reported that Baron Capital marked down the Bengaluru-based company's valuation by 34% to $7.1 billion as of December 2022. Baron Capital participated in an investment round in January last year when Swiggy had raised $700 million. The fundraise was led by US-based investment firm Invesco and saw the participation of Baron Capital, Sumeru Venture, IIFL, among others. Apart from Baron, US-based Invesco also had slashed Swiggy's valuation to about $5.5 billion as per its recent filings. Despite the markdown, Swiggy on May 18th announced that it has turned profitable. As per a Business Standard report, e-commerce player Meesho, backed by marquee investors like SoftBank Group and Meta Platforms, will look at the IPO only in 2025, and until then, its focus is to generate profits after tax and not just be EBITDA, that is earnings before interest, taxes, depreciation and amortization, positive. In a clear shift of strategy, the company, which has reduced its cash burn by 85%, is now looking to trim its annual revenue growth target to 40% from the 100+% earlier. Sources have, however, confirmed in the report that even this level of growth was far higher than that of most e-commerce companies. In FY22, Meesho saw its revenues jump 4.5 times year-on-year while its losses rose even more steeply by 7.5 times. The startup makes around 10% margins on its transactions, whose average ticket size is 350 rupees. BPEA, formerly known as Baring Private Equity Asia, has emerged as the front-runner to acquire a majority stake in Credila Financial Services Limited, the education loan unit of HDFC Limited, for as much as $1.5 billion, that is 12,000 crore rupees. The Asian buyout fund will likely pip rival bidders, including Blackstone, Carlyle, TA Associates and CVC Capital, to clinch the deal as per reports. The deal is in the final stages and is likely to be announced in June ahead of the mega merger between HDFC and HDFC Bank. Earlier this month, various media reports made rounds saying that Blackstone, Warburg Pincus and sovereign wealth funds such as Abu Dhabi Investment Authority and Singapore's GIC had expressed interest in acquiring a stake in Credila. Well, that was all about corporates. Now let's take a look at those market stocks that were in the spotlight today and also analyze the reason behind it. First up, after disappointing fourth quarter results, ONGC stock on Monday saw the biggest fall in 6 months after November 21st, 2022. It touched an intraday low of 156.50 rupees before closing at 159 rupees. In fact, quarter on quarter, the company has turned from profit to loss in quarter 4. During the quarter, the company has posted a loss of 247.7 crore rupees as against a profit of 11,044.8 crore rupees. This is because the company has registered a one-time loss of 9,235 crore rupees, and the company has in fact made a provisioning of 12,107 crore rupees for the dispute related to service and GST as well as interest payment on royalty payment. This matter is related to royalty payment from April 1st, 2016 to March 31st, 2023, and although the company will continue the legal battle on this matter. Meanwhile, the income in quarter 4 decreased by 5.9% from 38,583.3 crore rupees to 36,292.6 crore rupees. Operating profit quarter on quarter declined by 19.9% to 16,340 crore rupees from 20,411.1 crore rupees, and operating margins too eroded. Operating margin declined to 45% from 52.9% in quarter 3. And there is also news that the company has announced to start gas production from Krishna Godavari Basin from June 15th. And for this, the company has also invited bids and has demanded $12 per unit. The City Union Bank share fell up to 10% after the fourth quarter results, even though the bank's results have been good. The stock touched a low of 125.65 rupees during the day. NII, that is a net interest income, grew by 2.7% year-on-year from 500.7 crore rupees to 514.2 crore rupees. Profit grew by just 4.3% from 209 crore rupees to 218 crore rupees because provisioning has come down by 7% year-on-year. Gross NPAs of the bank have come down from 4.62% to 4.37% on a quarterly basis. Net NPAs have come down from 2.67% to 2.36%, but the results have been less than the market estimates, due to which the stock has seen a decline. The second disappointment has been on the front of NIMs, that is net interest margin. The bank's quarter-on-quarter NIMs came down from 3.88% to 3.65%. The third reason is that according to brokers, the results are weak and the road ahead is challenging. ICICI Securities has reduced the rating from add to hold with a target of 140 rupees. Similarly, Nirmal Bang has also downgraded a rating to accumulate and target is at 151 rupees. Elara Capital has also maintained accumulate rating with a target of 145 rupees. Shares of GMR Airports plunged more than 11% on Monday and the stock touched an intraday low of 40 rupees during the day, which is the reason for the very disappointing Q4 results. In fact, in Q4, the company's year-on-year losses have increased. The company has incurred a loss of 441.5 crore rupees in the fourth quarter, and the company's loss in the same period last year was 141.3 crore rupees. Although the company's income during this period has increased by 47.6% from 1,283.6 crore rupees to 1,894.6 crore rupees. The biggest problem for the company is the performance at the operating level. The operating profit of the company has decreased by 51.5% from 534 crore rupees to 259 crore rupees. And the margin has also registered a huge decline. Working margins have declined from 41.6% year-on-year to just 13.7% in Q4. Stocks of Balakrishna Industries gained almost 26% in the last 2 months, and this was also seen because the results are to be expected to be good as seen in other companies of the sector. On the contrary to the rest of the companies in the sector, there has been a decline in all parameters. Company's income in Q4 has decreased by 2.4% from 2,374 crore rupees to 2,318 crore rupees. Working profit has decreased by 6% from 500 crore rupees to 471 crore rupees. The operating margin declined from 21% to 20.3%, and the profit decreased by 32% from 374 crore rupees to 256 crore rupees, while other companies in the sector have seen at least 100% growth in profits. Management commentary has also been weak according to management. Channel inventory issues continue, which has resulted in decline in sales. The management expects channel inventory issues to be resolved by June-July, but the market is assuming that the results of the first quarter of FY24 may also remain under pressure. This is very important for the company because about 50% of the company's income comes from abroad. That's all tonight on Corporate Central, but before we leaving you with some important corporate events and triggers which have the potential to make big market impacts. First up, results on May 29th, most awaited results of IRCTC were released, whose impact were felt in the market. And globally, US and UK markets remained closed. On May 30th, results of Apollo Hospitals, Adani Ports to be released. And also, board meeting on Torrent Pharma results is on May 30th, where along with the results, board will consider raising funds. And also, the board meeting on Balmer Lorry results on May 30th, wherein buyback or bonus shares will also be decided by the board. And ex-date of a dividend of ITC Vedanta also falls on May 30th. And globally, US March House Price Index figures to be released on May 30th. Also, May consumer confidence figures of US and also the Europe to be released on May 30th. Well, with that, it's a wrap on Corporate Central tonight, but you can catch all the other detailed updates on Corporate World on Money9's website, www.money9.com. That's all from me. Take care and see you tomorrow.